What's going on, y'all? Welcome back to the Mining Pod for this week's news roundup. We got a duo show today with your boy Matt Kimmel and your boy Colin Harper. Matt, how you doing today, man?
Doing great. Ready to tackle some news.
Yeah, we got a lot of things on the docket today. At first, I thought it was a little bit of a slow week, and then obviously our boy Wolfie Zhao at the Miner Mag coming in clutch with some stories that went underreported with the usual suspects in crypto media. So we're going to start with the usual difficulty update. We'll move on to a JPMorgan report that shows that US Bitcoin miners getting a big bump in hash rate share over the last couple of months. We'll move on to Mara leveraging its fat Bitcoin stacks for some Bitcoin-backed credit. Then we'll move on to Cipher mining going big into the acquisition game with 3 500 megawatt sites in its purview and pending acquisitions. We have an AI update with Crusoe and Bit Digital. And then for this week's Cry Corner, gotta talk about mempool.space adding a runes tag, much to the dismay of the maximalist high priests.
Are you a retail or institutional investor interested in Bitcoin mining companies? The Miner Mag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com. Thanks for listening to The Mining Pod. Want more? Subscribe to our main feed on Apple, Spotify, YouTube, or wherever else you get your podcasts for another weekly show on Bitcoin stocks. And check out our newsletter at miningpod.blockspace.media today.
To start, as always, got to get this difficulty update going. As we can see from our friends at mempool.space, a lot of mempool.space this week. We love you guys. Keep it kosher. Keep going with what you're doing. Looks like we've got a 0.72% difficulty estimated upward adjustment coming in about 5 days or so. Pretty thin upwards adjustment. This follows a 4.12% upwards adjustment from the last cycle. And all of this is kind of in conversation with a bump in fees recently from some runes activity, and also hash price going up to roughly $50 per petahash per day as Bitcoin has shown some resilience in the market. I believe that last I checked, we were about at like 66,000 or something like that. So a big bump in Bitcoin price, bump in transaction fees, hash prices going up. Looks like a very small difficulty adjustment on the way. And I think that we'll probably see maybe a larger one after this if Bitcoin continues to rip. But curious if you have anything to add here, Matt. Seems pretty straightforward.
Yeah, not too much on the difficulty front this week. I mean, maybe it trickles up a little bit because there's that hash price relief you're talking about, really price driven there. I think on the week, Bitcoin is up just over 10%. It went from like you said, up to 66, 67, started out at about 60K. $50 per petahash per day. It doesn't seem like something that miners would really want to celebrate if you think about it historically. But I think at the same time, this is like the highest level that hash price has been at kind of on a steady basis since July, since the summer. So it's kind of nice to see. We root for the miners on this show, but yeah, not much on the difficulty front to report.
Well, I want to piggyback what you just said really quickly. You're right. So we're at about $53 per petahash per day. That's the highest we've seen since a brief bump in August, but that doesn't really count because it was like a transaction fee surge based on ordinals and runes activity. Mm-hmm. But yeah, it's like the highest we've seen since July when it was steadily just above $50 per petahash per day. Like you said, historically, dog shit. Locally, though, the miners will take what they can get, right? I mean, that's a little bit of relief coming out of what has been a historically brutal hash price environment after the halving. And speaking of, brutal environments, not so brutal necessarily for some of the U.S. publicly listed miners. What are your takes on this, Matt? Surprised, not surprised? How are they measuring hash rate here? What are your thoughts?
Yeah, not super surprised because of the expectations that the publicly listed miners put out on hash rate expansion. I mean, it's been an all-out arms race lately. It feels like, good quote I feel like here that really explains it is They said the combined hash rate of the 14 US listed miners, we're talking about US public listed specifically here, increased 70% year to date versus 33% increase in network hash rate. So the public listed US miners certainly outpacing the rest of the network, now nearing a third of hash rates. Wild. And yeah, to your point about checking, well, is that really accurate? Went to our friends at the Miner Mag who check up on the market share of actual Bitcoin earned across the public listed miners, right? And so number of Bitcoin terms, not hash rate. And they've got the number for September end at 25%, which is, yeah, pretty close off. And I mean, just relatively to compare, right? That number, the share of Bitcoin production amongst public listed miners at the start of the year was 20%, now 25%. So they're certainly outpacing and growing as quickly as they can. You notice that with all the financing coming into the space, the CapEx spend into new ASICs, they're deploying them and they're growing. Interested in your take here. I think you kind of look at this maybe from two different angles as a Bitcoiner, right? You could think, well, the US has a strong history of property rights and historically is, a free market economy. And so if there was to be a place with a decent share of Bitcoin mining hash rate, the US may be one of the top places to do it. On the other side of things, you might think, well, we don't want anywhere to have any kind of concentration of hash rate. We want it to be as distributed as possible, right? We want as low of a attack surface or susceptibility to regulation or anyone going after the miners. I kind of sit more on the former, and maybe that's my American bias coming in. But I mean, where do you sit on this? What do you think about the story?
So I really like your contextualizing it with Miner Mag data, because I think that looking at Bitcoin production is probably the best way to actually look at how much hash rate is currently operating in the US. Now, the thing that would obviously impact that is you have a lot of miners like Riot, for instance, right, that are going to partake in curtailment programs, and they're going to curtail their hash rate at times when they can pipe power back to the grid and get credits or get some sort of remuneration from their power providers to do that. So, but on that note, about 25 to 29%, depending on whether or not you're looking at Bitcoin or pure hash rate, it's more than I honestly would have expected at this point. Obviously, we've always seen the updates from miners about how much hash rate they plan to add, all of the ASICs from the next generation, like the S21 and M60 that they have on order. But, it's always been this kind of tug of war of expectations between what they say they're going to do and how they can actually energize those. And I think that there have been a few players that have been extremely aggressive since the halving. The clean, your Clean Sparks come to mind, your Marathons come to mind, Riot comes to mind. They've been adding pretty substantial hash rate, even in the face of all-time low hash price. And whether or not, going back to your question about, is this a good thing or a bad thing? I'm generally of the mindset that I think that US hash rate dominance will probably hit a peak, if it hasn't already, over the next few years, and then slowly dwindle over the coming years. I wrote an op-ed for Bitcoin Magazine last year in one of the mining issues of their print magazine. And I would have a hard time believing that, 30% from the public miners, and, maybe that translates to what, 40, 45%, maybe 50% on a higher end for just general hash rate in the US. I don't see us maintaining that dominance for forever. And I do think it'll be better for the Bitcoin network over the long term if that does recede and maybe some of that hash rate kind of permeates into some other jurisdictions. The biggest threat that I see, though, is not, if all of this were private miner hash rate, I would be a little less leery about it. I think the public companies are really easy targets for regulators and for governments to basically create certain choke points, right? I mean, the classic example of this, and they weren't even asked to do this by regulators, is Marathon removing OFAC sanctioned addresses from their blocks for a brief period there in 2021. They only did it for a couple of months. But I do think that there's something to be said that too much hash rate in the hands of public companies, especially in a place like the US, probably gives Bitcoin a little bit of a nerf to its censorship resistance on a long enough time horizon, depending on which government or which regulators kind of get at the helm and tell them to do, certain things or not, right? Not saying that that's happening now, not saying it's definitely going to happen, but it's definitely an attack vector. And I think that overall, I would rather have less hash rate in the US on a long enough time frame than more. But it's not really up to me. It's kind of like you said, strong property rights here, strong capital markets. There's a reason that a lot of hash rate has migrated here. So if the market says they want to stay here, then who am I to tell them to buzz off, right? But I think with that, we will move on to our next topic, which is also in the realm of public miners. As always, a decent amount of public miner news here. And that is Mara is leveraging its Bitcoin stack to take out a $200 million credit line. Now, these Bitcoin-backed, loans are nothing new, as the Miner Mag points out in an article that I will reference here in a second after I go through this. This has been something that the Bitcoin mining industry has done for a while. But to put this into perspective, Marathon has roughly, or what is it? I had it here. It's like 20,000 Bitcoin on its balance sheet. It might even be more than that. This is a no-brainer for them. They have the largest treasury of any Bitcoin miner in the game, at least on the public side of things. And this $200 million loan, if we assume a price of $67,000 per Bitcoin, they're basically locking up about $3,000 worth of their Bitcoin in a loan like this. So, and I have the numbers in front of me now. Sorry. Marathon, as of September, has 26,842 Bitcoin unencumbered on their balance sheet. Now that will be probably reduced, like I said, by about $3,000 with this loan, because they're going to use that obviously to take out this $200 million credit line. It's not clear to me whether or not this is I don't know if they've taken out all the 200 million, if this is a revolving line that they can draw on when needed. I'm really curious to see what they use for this, right? Fred Thiel has been kind of cagey about whether or not Marathon is going to break into the AI market like some of these other miners have. But Marathon's also made a lot of moves recently to go from their asset light strategy. Historically, they hosted their mining rigs at third-party hosting centers, and they've really moved towards purchasing centers outright. Great example of this being the Granbury, Texas facility that they purchased from Hut 8 and USBTC, which USBTC purchased from the Celsius bankruptcy, or sorry, not Celsius, excuse me, Compute North bankruptcy. They have a few other sites that they own outright. I wonder how much of this will go into purchasing infrastructure for their self-mining operation. Curious if you have any thoughts to that as well, what they might use this for or anything else.
I don't necessarily know what they'll use it for. Maybe they get into the HPC game. Maybe they just buy more Bitcoin. I don't know. But it is interesting to me that the Bitcoin-backed loans for miners are becoming more prevalent. Because last cycle, 4 years ago, the common thing was the ASIC-backed loans, right? And it really didn't work out too well for the financiers. And there were other factors at play, right? But Celsius went under, Genesis went under, right? NYDIG ended up taking on a lot of machines kind of in-house. And so they weren't necessarily repaid in the way that you would think they perhaps wanted to on their loans. Galaxy as well, shown on the screen now if you're watching on YouTube, took apart different infrastructural assets. It's happening kind of across the board. New players, Coinbase really kind of prevalent in this, and they're kind of shaping their own terms around these credit facilities, which I encourage you to read the article because it's in here. But yeah, CleanSpark, Hut 8, Canaan, Marathon, all kind of taking out loans via Bitcoin backing. And I'm interested to see how it plays out. I mean, these types of the scale of capital markets and financing in the Bitcoin mining space is kind of a newer phenomenon historically. Like, it really just tracks back to last cycle. It seemed like there was a trial and error with the ASIC backed approach I recall Drew Armstrong actually writing a really good piece about this over the bear market, which maybe we could link in the show notes or something like that. But yeah, now a lot of it seems to be going the Bitcoin backed route, and interested to see how it turns out.
Yeah, I think that we've kind of come full circle on a lot of things. I don't think the ASIC backed loans will be one of those things, to your point. But going kind of piggybacking on some of the things you said, the ASIC backed loans, the Bitcoin backed loans, these have all been kind of industry specific financial tools that were kind of necessitated over the fact that Bitcoin miners have really been shut out from capital markets, at least from a lending perspective. It's very difficult for some of these miners to get loans. Some of them have privileged credit lines with legitimate banking partners and things like that. So they can still get these loans every now and then. But the ASIC backed loans and Bitcoin backed loans, like I said, were really kind of industry specific because it's been very difficult for miners to access credit, especially now that rates are higher. I mean, they could barely get it when the Fed fund rate was at 0%. Now it's at 5% or whatever it is. And those ASIC backed loans in particular are just not even possible because the interest rates on them would be insane. I mean, even when the rates were low, they were anywhere from 10 to 20%. Now you're talking about upwards of 20%. So I'd be kind of like you. I'm not optimistic, but I am cautious here about what this will end up looking like for these miners down the road. Obviously, when Bitcoin's pumping, this is a great time to leverage your balance sheet, right? But what happens on the downside? We've always seen these horror stories on the news of, miners holding their Bitcoin treasuries when Bitcoin surges to an all-time high, only for them to sell it in a bear market at a loss. So curious to see whether or not this ends up becoming more of a curse than a blessing for some of these miners.
You took the words out of my mouth there. Everything's peachy in a bull market, right? And miners have historically not necessarily been actually good traders of Bitcoin when it comes to the exchange rates and the cycles. So we will see how this plays out.
We will see indeed.
In the competitive world of Bitcoin mining, one name stands out: CleanSpark, America's Bitcoin miner. At CleanSpark, efficiency isn't just a goal, it's our standard. Our sophisticated facilities are built and led by expert teams who care about Bitcoin and the communities we work in. Scale, we've mastered it. Our large-scale operations have set us apart in the industry as examples of community-oriented building. Our track record speaks for itself. We navigate the complexities of the new economy with precision and with skill, continuously achieving operational milestones. Curious about how we do it? We invite you to discover the story behind CleanSpark's success at cleanspark.com.
Miners need capital. They need to do crazy things with their balance sheet so that they can do crazy things like this next story, where Cipher, and this has not been finalized, but they're in the process of closing on a deal that would give them 1.5 gigawatts of data center sites in the pipeline. This is split across 3 different sites in West and North Texas. Matt, take it away. What are your thoughts on this news story? What is Cipher doing here, and why should people pay attention?
Yeah, so a couple of notes here. It's 1.5 gigawatts potential capacity across 3 different sites, and it's an option to acquire these over the next 24 months. So a good timeline here for them to basically suss out the situation to decide if it really makes sense for them. And I have a feeling that part of those decisions are going to depend on the demand for kind of the end output AI plays. Will that industry basically see compounding growth, or will there be a correction where they've kind of overhyped the amount of potential revenue coming from those sectors? So I think it gives a bit of leeway here, a little cushion room for Cipher in this respect, but at the same time, potential like a major move potentially, because 580 acres of land, 1.5 gigawatts is nothing to nothing to shy away from. I mean, that's big move. And I think another thing that this highlights for me is it's just more in Texas. Just Texas is the place, right? Friendly regulatory environment, lots of energy. Another thing is these facilities are very close to transmission assets. So as we know, if you are a large scale miner, grid connectivity is, I mean, it's a non-starter basically without it. That's kind of some of the highlights from this story to me. You've been entrenched into this cross section of AI and Bitcoin mining, so you were probably knocked me out of the water here. What do you think about it?
I don't think so. I think you kind of covered it. It seems to give Cipher some decent optionality to say we're either going to outfit this for HPC and AI load. That's going to require a lot of things to go right? They're going to have to find the right team to build out that load, or to build out the infrastructure for that load. And then they're also going to have to find someone in the market who's willing to go with them versus a hyperscaler or some other company that's more vetted in the high performance compute business to actually take those services, to purchase those services. I think that's kind of the missing equation here for a lot of people when they look at this. It's like, okay, well, you can say you can outfit this all day long, but I've said this on the show before. When you set up a Bitcoin mine, your customer is the Bitcoin network or a pool from day one. There's no need to necessarily negotiate anything. You can immediately liquidate that hash rate for Bitcoin. It's not the same with these HPC and AI contracts. You can find a buyer of that compute, but as we've seen with some other miners like Iron, they had an agreement with Poolside. They had a pilot, and then Poolside didn't renew that contract. So it's like, how sticky are these things? Are you going to be able to get a multi-year deal like Core Scientific did with CoreWeave? And my kind of gut with this is this gives Cipher kind of the plausible deniability that they are looking at HPC and AI. And there's a cynical part of me that says they want to do that so they can get that stock bump, so they can get that investor mind share and market share, right? They want to signal to the market that just like all these other miners are thinking about jumping into this new, frontier for compute. And this reminds me of something that Fred Thiel of Marathon said recently. I mean, you got to caveat this by saying he's going to talk his book, because Marathon has really kind of just been, they've been a little cagey about doing HPC and AI, saying they might do it in the future, but they've been pretty clear about their expansion strategy, that they're only focusing on Bitcoin mining right now. He said that this reminds him a lot of the .com boom, right? There's a lot of promises. There are a lot of applications that people were being saying that they can do with AI. We're in the early innings. Maybe there's going to be some missteps and some tripping early on, right? I think AI is ultimately going to be the most impactful technology for, markets in our species since the internet. That being said, though, are all of the early movers going to end up becoming some of the leaders in the future? TBD, no one knows. So all that being said, I think it is, at least from a public relations and investing standpoint, a smart move from Cipher to kind of hedge their bet here, saying we can do it either or. The last thing I would say, to your point, this is 1.5 gigawatts in the pipeline. They didn't really say anything about if any of this was ready. How much of this is actually ready to go now? It seems like maybe none of it. Otherwise, they probably would have told us, right?
Yeah, I suspect pretty low.
Yeah,
I suspect pretty low. But yeah, to your point, slap a .com on it, slap blockchain on it, slap AI on it. You get that speculative hype money coming into your stock.
Yep,
that's an interesting play. I didn't necessarily think of it from that respect, but yeah, entirely plausible. I can't remember who was it in 2016, 17 who. It was like Kodak or something like that put blockchain in there.
Yeah, so it was I think it was Nikon.
Okay.
Maybe it was Nikon, but there's also the Long Island iced tea, and they went long blockchain and ended up getting sued by the SEC.
Yes, absolutely. That is shareholder value 101.
We are long Bitcoin over here at the Mining Pod, but we are not going to change our name to Long Mining. On that note, a good kind of transition here, because we're already talking about AI. We've got two interesting AI stories we're going to try to get through here pretty quickly. I guess we'll start with the Crusoe one. Crusoe gets backed by Blue Owl in $3.4 billion JV for 200 megawatt AI data center. big mouthful of a headline, big dollar amount right there. It's interesting to see this from Crusoe Energy, one of the early movers in the off-grid natural gas mining space. They've also been one of the earlier movers in Bitcoin miners pivoting towards AI and HPC. They've been pretty quiet about it. They're not a public company. They're a private company, so they don't report things as much. But I believe they started providing HPC compute on some of their off-grid sites as early as 2022. Could be totally wrong about that. But they were one of the first big Bitcoin miners to really announce that they were moving in this direction. And now they have a joint venture with Blue Owl Capital, a publicly traded company on the New York Stock Exchange, for building out 200 megawatts or so of HPC capacity. From this Miner Mag article, the joint venture comes 3 months after Crusoe revealed it was developing 200 megawatt data center at the Lancium Clean Campus outside of Abilene, Texas. Upon completion, it anticipates to accommodate up to 10,000 GPUs. The company announced that the project gives 100% long-term lease to a Fortune 100 hyperscaler tenant, with occupancy expected to begin in the first half of 2025. So it looks like we should see the first kind of, we should see cash coming into this in the first operational considerations kind of starting in the first half of 2025, usually pretty long lead times for these things. Curious if you have anything to add there, Matt, on this one.
Yeah, Crusoe got into the flared gas off-grid mining back when that was hot. And it seems like they had a partnership with Lancium too. So maybe they were in the grid balancing game. Seems like they're pretty agile going after kind of the flavor of the week. So now getting into the AI game makes sense, right? It makes sense as kind of the next step. They're taking advantage of, potentially where the new investments are coming into, right? The kind of burgeoning new sectors. So I don't know, something interesting to see. I always like these stories where something comes out about the private miners and private space, right? Because we get a little more insight into what's going on where we usually don't have information.
Right. And there's often really juicy tidbits from some of these private companies. The public companies get a lot of the news coverage, obviously, because everything in their 10Qs and 6Ks is public information, and they often beat their chests on press releases to try to pump their stocks more. Not the same incentives for the private miners. One thing I wanted to highlight on this, it seems, if I was reading it correctly, that Crusoe has a hyperscaler lined up, a Fortune 100 company, publicly traded, maybe not, but they have a hyperscaler client lined up for this compute. So if I'm understanding that correctly, that seems to me to sound like that they'll be hosting GPUs for this client. Be really curious to know who that is, because that kind of vets this thesis that what a lot of these miners are going to bank on is building out these HPC sites, hopefully getting a tier 3 or above data center that is, state of the art, market standard or above. And then they're either going to host machines for these hyperscalers that can't build quickly enough, or they'll just get straight out acquired by them, right? It seems to be one of the common talking points for why the miners who are breaking into this, one of the reasons why they're doing it is because they already have the megawatts allocated. Now they can, stand up a data center, and then hopefully they'll have a client from day one from one of these hyperscalers, or just get acquired by them. So going to be keeping my eyes out for who that is if we ever figure out who it is. Kind of an interesting little tidbit there.
Interested in Bitcoin scaling, startups, or learning more about Bitcoin Softworks? Join us Saturday, November 9th at the Fidelity Center in Boston, Massachusetts for Op Next, a one-day conference on scaling Bitcoin hosted by Blockspace Media, the producers of this podcast. Join Bitcoiners like Peter Todd, Portland Hodl, and more to discuss various Bitcoin proposals like OpCat, the Great Script Restoration, CTV, and more. Attend workshops, speaker sessions, and panels discussing the latest in scaling tech, from ZK to ARC to Bitcoin Softwork history. And for a limited time, use code OCTOBER to get 25% off a general admission ticket. Find out more by visiting opnext.dev. Again, that's October at opnext.dev. You can find out more by checking out the show notes below.
Last note on AI updates today for us: Bit Digital Inc. vertically integrates and acquires a tier 3 HPC data center company. with 280 plus megawatts in the pipeline. This is interesting because I had Sam Tabor on the Bitcoin Stock Show about a month ago and asked him if an acquisition was in the pipeline. He said they were looking at it, and lo and behold, here's the news. I'm sure they were probably ironing out the details during that podcast, right? These deals take a long time. But essentially, Bit Digital purchased this data center company called Innovum for $46 million or 62.8 million Canadian dollars. And with this, they are going to get roughly 200 megawatts worth or 288 megawatts worth of HPC compute in the pipeline. Now, what's important to note about this is that none of this is actually currently stood up. They say that 93 megawatts are currently under letter of intent with respective landlords, and all of these sites are in a major metropolitan area. That was something that Sam was adamant about, that if they were going to buy an HPC center, it was going to be close to a city center for latency, to make sure that there was no latency, and to make sure that when they were performing inference, that they would be, as quick as possible. According to this press release, the immediate term plans include bringing approximately 8 megawatts online by the end of Q2 2025 for approximately $50 million of CapEx. That kind of just goes to show, and they say here at the end, the company is tentatively planning to bring an additional 20 megawatts online by the end of the year 2025. This is very much a marathon and not a sprint. I think that the timelines and the lead times that some investors have come to expect, or public miner observers have come to expect with standing up a Bitcoin mine, you're not going to get the same lead times. It's going to take much longer to stand up an operation like this. It's going to take much longer to actually get these megawatts stood up and to get the infrastructure in place and to get the clients in place to monetize these megawatts. I'm always amazed at, something like that, where you'll have a press release where it's like 280 megawatts in the pipeline, but only 8 megawatts of those are anticipated by the middle of 2025. So like basically a year from now. Just kind of goes to show this is a completely different ballgame. Expectations should be managed accordingly. And whatever you think miners can do to deploy ASICs quickly, and if you think they're too slow for that, we'll just, wait and see, y'all, because it's going to take a lot longer for them to stand up these HPC business lines. But that's kind of it for me on that. Curious if you have anything to add, Matt.
I think you covered it. Yeah, honestly. And just a couple quick updates, news bits in the AI space. So what do we got next?
Everyone's favorite, or at least maybe my favorite, this week's Cry Corner, which is partially based on a newsletter from our boy Charlie Spears at Blockspace Media. And that newsletter is titled Mempool.space confronts Bitcoin maximalist purity test. The straight skinny for this is Mempool.space added a runestone and runes tag to its op return section on the website. So when you go to, or on the transaction section of its block explorer. So if you zoom in on a transaction and you look at the op return data, if that transaction included a rune, these little inscription things that Charlie is very good at explaining to people and that I really couldn't care less about, but that's beside the point. Now Mempool.space shows these in its transaction section on its block explorer. And wouldn't you know it, people were not too happy about this, especially one of the high priests of the anti-ordinal order, Luke Dasher, said ordinals, inscriptions, and runestones are not Bitcoin and do not exist on Bitcoin's blockchain. So, most prominent Bitcoin developers screaming at the sky, get your JPEGs and get your runes off of my blockchain, not in my blockchain, whatever you want to say. There's a lot of avenues you can go with this. Kind of just wanted to share this because I feel like we're in this space where no one's ever going to agree on these things. And, Mempool.space is just trying to enrich their services, make their block explorer a little more useful for people. And somehow they've been targeted by some of these, Bitcoiners who think that what they're doing is unethical or peddling scams. Look, I get it. Like, I don't think you should go out and buy runes or ordinals or inscriptions, especially if you don't know what you're doing. But I mean, to say that this is bad because you're showing arbitrary data on a block explorer, I just can't find myself. I can't bring myself to care enough about something like that.
Yeah, it seems a little silly. I guess I'll add a bit of context here. The op return field in a transaction, which basically the block explorer is reading into here, is totally nondescript. It's arbitrary. You could stick any message in there. And what's happened, and this is something that is kind of a part of Bitcoin history, is certain people basically made some software, made some rules, and standardized messages and stuck them in this field where you could stick anything, and made them mean on kind of an outside protocol, not Bitcoin itself, but elsewhere external to the system, as if assets were being issued, transferred, minted, etc. And so what's mempool.space doing? They understand the rules of these outside protocols, particularly in this case, runestones. And they're just kind of explaining to everyone that is what that transaction was, that this op return transaction was a runestone one. Other op returns in the past have basically indicated that a block was mined by a certain pool, or sometimes people someone rickrolled the whole blockchain and put never going to give you up in an op return, right? Like you can stick anything in there. And so what people are fed up about is, I guess, mempool.space recognizing the runestone community and saying that, yes, this is what is going on with this transaction. To me, it seems like we have bigger fish to fry as a community, and to get Bitcoin adoption increasing, I don't really care about the op return protocols. I think, free market, whatever, it can exist. And the fact that a block explorer is displaying the information kind of seems like maybe a part of their scope and their job as displaying information on the blockchain. But yeah, this is a bit of a nothing burger story in the broader context of things. It is just a happening of the week, perhaps.
I would agree with that. I would agree with that. And just one last thing to show here. Here's a before and after of sponsors of mempool.space. And I just love the ordinals community constantly putting its money where its mouth is. After they added this feature, you can see that the number of sponsors just increased by an insane amount. I think Charlie tabulates it here, where he says, in response, the ordinals community started flooding the open source project with donations, doubling the number of individual sponsors and approximately tripling the project's yearly revenue from individual contritibutors.
Wow.
Isn't that crazy?
That gives all the reason to do it. Are you kidding me?
Right.
Space is not necessarily a big for-profit business. They run a block explorer, to which you can locally run your own on your own node, by the way. But they're operating it based off of their own mempool and their own node, and just putting that information out there in the ethos. The fact that they are getting more donations and sponsorships by doing what seems like a pretty small thing just makes all the sense in the world.
Right. Put your money where your mouth is. If y'all don't like the monkey JPEGs and the runestones, give mempool.space more money. Maybe they'll take them off, but probably not. Well, Matt, I think that's a wrap for today. And for everyone tuning in, thank you all so much. Make sure to go smash that subscribe button on our YouTube at The Mining Pod if you haven't already. Follow us at The Mining Pod on X and at Blockspace Pod. Follow your boy Matt Kimmel. Follow your boy Colin Harper. And just have a beautiful weekend. Go out and enjoy the beautiful fall weather. Hopefully the leaves are changing where you are. Carve a pumpkin, get a little snuggy. Have a good weekend. Watch some football. Just do it.
Texas,
all right.
Georgia this weekend. Texas.
What'd you say?
Texas, Georgia is what to watch this.
That is going to be a good freaking game, and I'm going to probably drown my sorrows because the wheels are coming off of Tennessee's football team, and I don't have high hopes against Alabama this weekend. But anyway, watch Texas versus Georgia. Root for Texas if you like Matt. Root for Georgia if you don't. And we will see y'all next week. Take it easy, guys.